Have you ever been watching a chart and felt like the price was just being pulled towards a certain spot, almost like there was some invisible magnet on your screen? Well, guess what? You weren't imagining things. Today, we're going to break down one of the most powerful concepts in all of price action. Hey everyone, welcome to AI Explains ICT. In this video, we are diving deep into some core content from month 4, episode 12. We're talking about the fair value gap. And trust me, this is one of those ideas that once you see it, you will start seeing it absolutely everywhere. So, I'm serious about this next part. You're going to want to grab a pen and paper or open up a notes app. ICT himself calls this the single most important PD array. Mastering this one concept can literally change the entire way you look at a chart. You ready? Let's get into it. So, what is this powerful price magnet we're talking about? Well, at its very core, it's all about an imbalance in the market. It's about an inefficiency in how price was delivered. Okay, so the official term is a fair value gap, or FVG for short. But what does that actually mean? Simply put, it's just a spot where the market moved so fast, so aggressively in one direction, that only one side of the market really got to participate. Think about it. If price just plummets, only sell-side liquidity is being offered. The buyers, they got left in the dust, and that creates a little void, an inefficiency. So that's the theory behind it. But how does this imbalance actually appear on our charts? What does it physically look like when we're looking at candles? It all comes down to a really simple, repeatable 3-candle pattern. And I'm not kidding, once I show you this, you'll never be able to unsee it. So let's break down the anatomy of how to spot one right now. Take a look at the highlighted area right here. You can see how clear this pattern is. It's always made up of 3 key candles. You have candle 1 on the left, you've got that big explosive move in the middle, that's candle 2, and then you have candle 3 on the right. The gap itself is that empty space created by that big middle candle. Here's the simple 4-step process. First, you find that big energetic candle right in the middle. Got it? Okay. Step 2, you mark the low of the candle just to its left. Step 3, you mark the high of the candle just to its right. And that space in between those 2 marks, that's it. That's your fair value gap. It's the area the wicks of the neighboring candles didn't touch. Okay, cool. So we can spot the gap. Big deal, right? Well, yes, it's a huge deal. This is where the magic happens, because this little imbalance acts like a ridiculously powerful magnet for price in the future. Think of this gap like a vacuum. The market's algorithm is all about efficiency. It wants to facilitate trade between buyers and sellers smoothly. When it leaves behind a messy, inefficient area like this, where only sellers got to play, it has a powerful tendency to want to come back later and rebalance things. It wants to fill that vacuum. And hey, don't just take my word for it. This comes straight from ICT. He says, we're going to expect price to eventually want to trade back up into that little gapped area. It's not a question of if it will come back, it's just a question of when. Now let's move from theory to reality. Let's see how this concept can build into a complete, high-probability trade setup, from start to finish. So in this scenario, we've got 2 critical things happening. On the left side, you see the setup. Price first takes a dive below an old low. This is a classic liquidity raid, what ICT calls a turtle soup. It's designed to grab all those sell stops that are just sitting there. Okay, so once that liquidity is taken, where is price likely to go next? It's going to hunt for inefficiency. And that's our target, over on the right, that beautiful fair value gap just waiting to get filled. And here is the payoff. I mean, look at that. It's perfect. After rating the lows, what does price do? It reverses and makes a beeline straight for that inefficient zone we identified earlier. You can see it trades perfectly back into that yellow box, filling the fair value gap to a T. The magnet did its job. And this wasn't just some tiny little scalp. That one move, from the liquidity raid all the way up to the FVG fill, was worth over 100 pips. This just shows you how incredibly powerful these concepts are when you start stacking them together. It's a clear, objective, and quantifiable result. All right, now let's put this whole idea under a microscope. What does a fair value gap from a high time frame, like a daily chart, actually look like when you zoom way down into an intraday chart? This is where you really start to see the precision of it all. So on a lower time frame, like the 15-minute or the 5-minute, that single FVG candle often breaks down into what we call a liquidity void. It's the exact same concept, an area of one-sided price action, but here it looks like a series of aggressive, fast-moving candles with almost no wicks or overlap. Just look at this side-by-side comparison. On the left, we've got our daily FVG. On the right, that's the exact same price level, but viewed on a 15-minute chart. Do you see how the market returns to that level with just surgical precision? This isn't random noise, folks. This is algorithmic. The price delivery algorithm is simply coming back to rebalance a price level that it left inefficiently before. So if there's one thing you take away from this video, it's this. Fair value gaps are a roadmap to market inefficiency. The underlying algorithm that delivers price is programmed to seek out and resolve these gaps. Your job as a trader is just to find them and anticipate that inevitable repricing. And that really is the key, isn't it? You now have the blueprint to identify these powerful price magnets. So the question I'll leave you with is, when you open your charts next, where are you going to spot one setting up? Hey, if you found this breakdown useful and it helped something click for you, do us a huge favor and hit that like button. And of course, make sure you're subscribed to the channel so you don't miss the next deep dive. And seriously, if anything was unclear or if you have any questions at all, just drop them in the comments section below. We read every single one, and a real human will get back to you with an answer.
That's all for this one. Thanks for watching, and as always, safe trading.